This is the island of Åland in the middle of the Baltic between Sweden and Finland. Finland used to be part of Sweden, and the people on the group of islands are Swedish speaking. But Finland, including these islands, became part of the Russian Empire in 1809 when they conquered it. The Russians made it what they called a Grand Duchy. Finland became independent at the Russian Revolution, and then the islands became part of Finland. But they're semi-autonomous, and so they're exempt from the EU's rules which ban duty-free sales on drinks. So all the large ferries which run on the Baltic routes between Sweden and Finland and Estonia are registered at the tiny port of Mariehamn, which is the capital of these islands. And they all call there in the middle of the night. It's light there in the summer, that's why it looks like this. And the point is to be exempt from the European Union's regulations about the sale of drinks on ships. It's a tax dodge. I'm not especially keen on alcoholic drinks myself, but these are my purchases. There's some aquavit, more aquavit, Jägermeister. This is an empty bottle. It had Dutch gin in it. There's those nice stoneware bottles. There's more. There used to be draconian rules against the sale of alcohol in Sweden, but they couldn't stop people brewing their own. And a nice little industry grew up selling ingredients for homebrew, so it's very easy to get stuff for homebrew. These are some of my efforts that I've made with it. That's now threatened by the problems of obtaining the ingredients from Britain, because the malt that people like is called Maris Otter, and it comes from England. The German malt doesn't handle quite the same way. It's got a slightly different flavour anyway. It went on. Some of the home brewers then started up microbreweries, so there's a thriving microbrewery industry. You can get some very nice craft beers in pubs in Sweden. So there we were, unintended consequences. Taxes make people do weird things. Let's get back to the subject of the leaflet, which is what this talk is really supposed to be about. A stronger economy. If we tax labour, buildings or machinery and plant, we discourage people from constructive and beneficial activities and penalise enterprise and efficiency. I'm going to explain this in a simple possible way. If you're familiar with the theory, you'll know there's a lot more behind it. That's for another time. Whatever you tax, you get less of. Taxes on alcohol lead to less boozing. Taxes on cigarettes lead to less smoking. It's pretty obvious. That's why they do it. Taxes on windows led to bricked up windows. In Greece, there's a tax on completed buildings, so they don't quite finish them. You'd think that politicians would learn, but they don't seem to. There was even a tax on clocks that was introduced in England in 1797, and that's supposedly the origin of those great big clocks called tavern clocks. It isn't really, but that's the story that goes round. The tax lasted a year, which was long enough to ruin the flourishing clock industry in Clerkenwell, and it never really recovered after that. Income tax is a tax on working. National insurance is a tax on working. The employer's contribution is a tax on employing people. It doesn't take a genius to work out what the effects of these taxes is going to be, but you find them almost everywhere. On top of that, benefit payments are linked to earnings, and if you exceed them, they're lost. So that's effectively a tax because you lose benefit. Value-added tax, as its name implies, is a tax on the addition of value. The addition of value is known as wealth creation. So if you tax the addition of value, you'll reduce the amount of wealth created. It's not very difficult, is it? This site here in the middle of Brighton hasn't got any buildings on it. It's unused, it just grows buddleia. So there's no tax on that, because UK property taxes work on the principle of the building and its site. So no building, no usable building, that is. No property tax, so no business rate, no council tax. It's brilliant, isn't it? What it does do, though, is it encourages land hoarding, because while the value of land is going up, which it tends to over a longer period, it's not costing the owner anything. It's nice, very good. Let's get back to the rest of the text. The reverse is the case with the tax on land values, which is payable regardless of whether or how well the land is actually used. It's a payment based on current market value for the exclusive occupation of a piece of land. In the longer term, this fundamentally new and different approach to revenue raising will stimulate new business and new employment, reducing the need for costly government welfare. In other words, land value tax does not penalise economic activity.